Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased price action analysis. Hello nieces and nephews, guys, we got a situation here with the S&P 500. But before we talk about the next plan of action, let's recap a little bit, guys. You remember when we hit that bottom around 510ish? Guys, remember that? And then we got that little run up, and Uncle talked about, hey guys, we got a little rising wedge here. We had to watch out for the breakout or the breakdown. Breakdown was around 531, 534 at the time. And I mentioned that breakout was at 537-ish at the time. And boy, oh boy, that was like what? That was like what? $16 ago? I can't do math. Worked out really well, guys. It goes with Uncle Charles's like core trading plan about, well, the concepts, the price action concepts about how the market it cycles between two phases. The trend phase and the chop phase. Okay, in this situation, the chop phase came in the form of a rising wedge. When we talk about chop phases, to simplify it, I call it a chop phase. But the chop phase, it can be a channel, it could be a flag, it could be a wedge. All right. Now, a lot of times people hear a rising wedge, they're gonna think bearish. People see a bull flag, they're gonna think bullish. When it comes to these patterns, guys, that's why I like to refer to them as a chop phase. And when we're in the chop phase, anything can happen. It could be bullish, it can be bearish. But when that happens, it's important for us to identify the range, or in this case, the structure, which gives us the range. And when we get the range, we get the levels. Does that make sense? It just all goes together. All right. So once we broke out the chop phase, or the chop range, I should say, and got a nice little trend move to the upside. Okay, from 537 breakout going as high as 553.36 today. Had a fib level of 553.4. Holy moly, did it almost hit Uncle's target. Discord members, y'all know. Anyways, which brings us to the next context that we need to consider here, guys. You see, we had this pink downtrend line, and we got ourselves a breakout, but this is not just a regular breakout, okay? If it was a regular breakout, we get a traditional breakout intraday, and we would have been able to trade it. But no, look at this space right here. It's a gap up. What kind of gap up is this? It's called a breakaway gap. You guys can see an image right here. We got the triangle, or the whatever you want to call it, the structure, gap up. Instead of a traditional breakout, we got the gap up. This is a bullish breakaway gap. All right. Here's an example of a bullish breakaway gap. We got the trend line. Instead of breaking it out traditionally, we get a gap up out of it. That's a breakaway gap. Here's an example of a bearish breakaway gap. Does this look familiar to you guys? Huh? Look at this. Look at, we have the trend line. This uptrend line that went on since May. And how did we break it down? We had a bearish breakaway gap, and boy, did that age nicely. But now, that's a bearish breakaway gap. But now, we got ourselves a bullish breakaway gap. Okay? So all the people that like gaps, look at this. Look at this. The last time this happened was back in early May. We had a downtrend, bullish breakaway gap, and look at that. It went on just destroying the bears. And how did it end? It ended with a bearish breakaway gap, which destroyed the bulls. And now we got ourselves another breakaway gap. Now, what do we got to talk about here? Well, if we got a bullish breakaway gap, wouldn't that mean we're bullish? Well, the price action is bullish, the chart is bullish, yes, but we still need more follow through. We need more follow through. What does that mean? What does that look like? It means we need to clear the next fib level at 553.4. It was a sell zone today. It paused there. If we break it out, I don't care what the RSI says. If we break it out, bullish. The bullish breakaway gap continues upwards. All right, 553.4, 555, 557, 560, all the way up possibly to all-time high at 565. We do have a gap around 563 ish. So now that we know the bullish breakaway gap is bullish, and now that we know what levels need to clear next for a follow through, and now that we know what the targets are, we also need to know how does this setup get invalidated. Because unlike Ron Walker, we don't call tops here at Uncle Charters' YouTube channel. We follow the price action. Now, what setup usually puts in the top? The false breakout setup or the gap down, exhaustion gap, or in this context that we had back in July, a bearish breakaway gap. All right, we're not going to get no breakaway gap based on this context, but we can still get a gap back below it. Either way, the breakout of this trend line needs to be invalidated. That takes us to the next level, support level, 544. That's based on the fib level, and it's based on the downtrend line. That is the main critical level that bears need to break down to invalidate this bullish breakaway gap. If bears, listen, is at 552.8ish. I have support at 552, 550, 548, 546, and then 544. I always say play it one level at a time, one setup at a time. But if we're talking swing trading, okay, we're talking big move, $10, $20, $30 move. For a bearish move, 544 must fail to put in a top. Does that make sense? Otherwise, guys, based on the context of this breakaway gap, we are bullish, and clearing 553.4 and 555 would be bullish follow through. Triple Q, I'm on a 15. Let me go to the daily. Look at that. Well, the thing with Triple Q is unlike the SPY, okay? When Triple Q broke out its downtrend line, all right, when Triple Q broke out its downtrend line, it wasn't a breakaway gap, okay? It was a traditional breakout. You guys see the breakout? Breakout right there. And then how did we know the breakout was good or some confirmation? Right there, the next day. The next day, Triple Q retested that downtrend line as support and found buying pressure. And now we got the gap up. Look at that. There was no crystal ball. There was no calling of the bottom or calling of the top. And I did not have to read 5,000 different news articles. And I didn't have to look at 5,000 different indicators. Just simple trend lines, simple levels and supports and resistance, simplicity, price action, simple. You guys see that? Let me get all my lines back. Now it's looking nasty again. Sorry, guys. But these are all my levels that I use to trade. As of right now, 473.2 is support level, critical support level. That's a fib level. Below that is 472 and 470. For me to favor a pullback, we need to start breaking down support levels. Starting with the fib level at 473.2 and then 470 to put 467.5, possibly all the way back down to 464. Big possibility, but like I said, gotta break down those support levels. We broke out a resistant level today, which was the fib level on the daily chart. So as long as above 473.2, Uncle Charters is bullish, and clearing 475 would be bullish follow through. Putting 477, 479, and 480.4 all in play. That's the next fib level. All right. Tesla. Daily chart. All right. We had an inside candle setup yesterday. All right. Uncle told everybody that the mother candle's high was at 208.5. All right. Getting back above 204 was bullish, which it did. It got back above. But then it cleared the mother candle's high at 208.5. And boy, it popped all the way up to 215.8, looking bullish. Uncle Charters is overall bullish above 208.5. So if we do get a pullback, that level must hold. On any pullback, I'll be looking for false breakdown setups. Now, from here, if we clear 214 and 215.5, bullish. I'm watching that downtrend line, the blue downtrend line. We could possibly go test it. That would take Tesla up to the next fib level at 220.5, and then the trend line's at 222. If those levels can test, we'll see if bears will step up there. But only possible to test if we clear 214 and 215.5. All right. If we break back below 212 and 210, we could back test 208.5. Now remember, Mother candle high was 208.5. So if we break back below that level, that's a false breakout. And false breakouts are bearish. All right. NVDA. Look at Uncle Charters is unprepared today. Look at that. Boom. Beautiful. Beautiful. Look, we had the green trend line, the green down trend line, gapped up. Gapped up. That's a breakaway, bullish breakaway gap. You guys see these things, they work. All right. And then we just head up higher. Hit. What did we hit? Went up as high as 123.2-ish today. We did clear a fib level. 121.6 was a fib level. That's a 61.8 Fibonacci level. Overall bullish as long as above 121.6. As long as above, the breakout stays intact. And if the breakout stays intact, we stay bullish. And clearing 123 would be bullish. Follow through to put higher targets and play like 125 and so on. All right, the pink down trend line is all the way at 127. So it wouldn't surprise me too much if we go test that. But we need to stay above 121.6, because if we break back below, that's a false breakout. Gap got filled. We had a gap all the way back in July 23. Gap got filled, and if we break back below, that might not be looking good for the bulls. Okay, watch out for those false breakout setups. All right, guys, let's take a look at the dark pool. This dark pool for SPY, 49%, 544.25. Interesting level because I have that 544 level as well. That's also a fib level and my downtrend level. It looks like big money is recognizing that zone. That's majority where most of them put their money. They park their money. And then the rest is at 553. Okay, so add those levels to your charts as dark pool. They're good for a day. Triple Q, 463 is where 39% of activity came from. 38% was at 474.5. And then 23% was at 474.42. So big money's been pretty active around that 474.5-ish level, which was actually around today's high. Not pinpoint, but around there. So I'm wondering if they dumped. But remember this. For somebody to buy, somebody had to sell. Okay? So some big money players decided to sell or maybe bought, and somebody, they had to sell it to somebody. Somebody also bought at the top here. I mean, it's a breakout of a fib level, so we'll see what happens. But we know there was activity there. If we get higher moves tomorrow, then we know like they was probably long in the breakout or something like that. I don't know what their mindset is, but we know activity was around today's top. Yeah. Okay, well, let's take a look at Tesla. 214.14. It's actually around one of my levels as well. 94% of activity was there. 214. I love it when the dark pool aligns with my fib levels and all that happy stuff. It's beautiful. NVDA 122.86. Yeah, I got a 121.6. And I do have a level at 123. Yeah. So that doesn't quite align with mine. But hey, pretty close. All right. Let's take a look at the flows for SPY. Filter for 100K premiums or above. Let's take a look at the short term. No, the size. Actually, let me look at the 500 plus size expiration time for the next month. Yep, above the ask. Let's go. I like this. And it's bullish. So I set up the filters to see the bigger size, 500 or above the ask for the short term for the next month. And it's overall bullish. We are seeing a lot of puts. Today's date is August 15th, so we're seeing some August 19th aggressive puts for 557 strike price, 550 strike price. As far as calls go, we're also seeing some short-term calls, 553, 552. But yeah, it looks like calls have the edge here. August 15th. A lot of them are for day trading as well, guys. Look like for day or expired today. So that's something to consider. Is that a lot of the calls right here that Cheddar Flow is recording are expired today. So we wouldn't even count that anymore. That's why we can't just look at, oh, it's bullish. Got to look at the context. Look at what the information is. So just because it's calls, got to take it with a grain of salt because a lot of these are expired already and the moves already happened. Okay? So we'll see if the move will continue. I'll definitely be checking these in the morning. And Tier 3 members, make sure you guys check it as well to see what happens. Yeah, but overall bullish. But if we take out those same day contracts, it would definitely be a little more even. Maybe more even. Yeah. Interesting. Triple Q, it's bearish. And there's a lot of puts expiring tomorrow. They had some same day puts as well for today. That was a split though. August 16th. So see, not that as many August 15th contracts that we saw with SPY, which is actually a good thing for bears. Because even if we take out those same day contracts, the puts would still be higher than the calls the way it looked like. Okay, let's take a look at NVDA. It's a bullish. So August 16th for tomorrow, seeing some calls here above the ask for 120 strike price. I wonder if they already took profit. Now this is for August 23, above the ask, sweep order, 125 strike price. Yeah, we're getting very close to that. We do got some puts. August 23 for 121. 120 strike price for August 23rd. August 30th for 125 strike price. Okay, so it's a bit mixed over here. I'm trying to see if a lot of these calls are same they are already expired. And so far, I'm not seeing a lot of them, guys. So a lot of these calls do have some time on it. So it's not like with SPY where we saw a lot of same day contracts. Okay. So yeah, so even still, the bulls have the edge with the contracts right now for NVDA and Tesla. Let's see. We've seen some August 16th calls expire for tomorrow, 215 strike price. Look at this one. This is above the ask, 250 strike price for September 13th. Interesting. Okay, a lot of these puts are for tomorrow, but they're not above the ask. One of them is a split. Yeah. You see, yeah, a lot of them are expired for tomorrow. Yeah, but even I still say calls have the edge here still, despite those same day contracts. Yeah. All right, guys. Well, I hope you guys found value in this. Definitely consider joining my Discord and be a member of the Sheep's Den. And let's kick these market makers' ass together. Get my intraday analysis. You know what I mean? Other than that, have a great evening, guys. I appreciate you guys for being here. Peace.